Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. Today we're going to talk about guidance, why it's so powerful, and use 𝗏𝗂𝗃𝗃's calendar fourth quarter 25 as a real-life example to illustrate. So let's start with a couple premises. And the first one is this idea that meeting or exceeding expectations over time is how a company drives long-term stock valuation. Now, the primary tool of driving that valuation is guidance. Guidance is how a public company sets financial expectations management, and then that is how they are judged as to meeting or exceeding. Therefore, the guidance process is the primary tool a public company has to drive long-term share valuation. So now let's get into this idea of guidance and valuation. And it's this idea that guidance at its simplest form is a range, and it consists of a low end and a high end. And knowing these two numbers allows you to imply or calculate a midpoint of that guidance range. So now let's get into the idea of understanding why the midpoint is such an important number in stock valuation. And we're going to look at two scenarios to keep this discussion simple. The first is the midpoint is greater than current consensus expectations. This means the stock price is going up, and the reason the stock price is going to go up is because consensus expectations need to reset higher. And depending on the magnitude of that change is how much the stock price goes up. Conversely, if your midpoint at earnings of your guidance is less than current consensus, the stock price is going to go down. Again, because consensus needs to reset lower, and therefore the stock price, because it was not expected, is going to drop, people selling. So let's get into this idea that your current valuation multiples relative to your guidance range and the midpoint of that range also matter significantly. And again, two scenarios. In a low expectations environment, your stock probably has a low valuation or low price, and your estimates are probably conservative amongst your sell-side analysts. In this scenario, the stock is going to exhibit a muted reaction to negative news, but likely an outsized reaction if you have a positive change to the guidance midpoint relative to consensus. Now, in the next scenario, in a high expectation scenario, your stock probably has a high valuation premium. Think stocks trading at 20, 30, 40 PE, 20, 30, 40 EV to adjusted EBITDA, 20, 30, 40 times sales. These are high premium valuation stocks that are exhibiting an extreme in valuation. And a lot of times, the estimates are aggressive in order to support these outsized extreme valuations. And these stocks are going to exhibit an outsized reaction to the changes in your guidance midpoint, both positively and negatively. Because again, your valuations are in an extreme, therefore the smallest changes drive a large impact. So now let's get into 𝗏𝗂𝗃 and their calendar fourth quarter 25 earnings as a real life example of why the midpoint drives valuation. And what the company did is they provided both calendar first quarter 26 guidance and full year 26 guidance. And what you can see is that the changes were not what I would call super large magnitude. For revenue for the first quarter, they're about 140 versus consensus of 143. On adjusted EBITDA, about 72 million versus 74 million. And then for the full year revenue, 625 versus consensus of 635, and adjusted EBITDA of 339 versus 341. These are not super outsized changes, but again, the stock and the stock price targets are all based on 30, 40 times out year PE or out year EV to adjusted EBITDA. And so these changes in guidance led to a 20% drop in share price after hours when they were issued. So let's get into the key learnings. And the first one is this idea that guidance is a public company's primary valuation driver over the long term. And secondly, the midpoint relative to consensus is the most important piece of data that comes from an earnings release or an earnings call. So always spend time on your guidance to get it right. Thanks for watching.